right, good afternoon, folks. This is your free video update from Seasonal Swing Trader. Today is Thursday, April 4th, 2019. Today we're taking a look at July soy meal. It's going to be ticker symbol ZM or SM depending on the platform you're looking at, and then N for July. So we're taking a look at July soy meal. And in case you're not familiar, soybean meal is a byproduct of the soybean itself and is actually produced from the residue left after the soybean oil extraction. So we have three main contracts in the soybean complex: soybeans, soybean oil, and soybean meal. They don't always move in tandem or are always correlated, but they are for the most part, and generally the entire grain complex does as well, meaning wheat and corn. So our members have been looking at soybean meal for quite some time. In fact, we just took profits on a short soybean oil trade, and now our attention focuses on soybean meal. Why? We have a very, very reliable technical pattern, which is the 1, 2, 3 pattern forming here. The 1, 2, 3 is simply when we form a new 52-week low, the prices rise higher, stop rising, pull back without taking out the low, giving us the 1, 2, 3. It can be drawn simply by the 1, 2, 3 indicator. So we have a 1, 2, 3. And our first profit objective is going to be the distance between the number 2 and the number 1 low, which is roughly $1,500 a contract. So you can see that takes us right up here into this resistance level around the 334 to 335 area. Secondly, another reason we like this trade is we know that from a seasonal perspective, we are approaching a very seasonal bullish time of the year for the soybean complex as a whole. If we add a seasonality tool, you can see that we get that confirmation here on the 3 and 5 year price averages. So we have a 3 and 5 year price average as noted here, and we are right around here in the sweet spot for a move into early May. This trade could be short-lived as we approach another very reliable seasonal pattern, and that is to the downside across all grain, across the entire grain complex going into May and June. So if we take a look at the long-term daily chart, we're also in a what I call a narrow sideways channel. These patterns don't appear too often, but when they do, you should get excited as they can often lead to explosive breakouts. So we're watching this closely here, banging around in between these moving averages, trading in a narrow sideways fashion. But if and when we get a breakout above the channel, watch out ahead. We could be looking for a very large move. We go over to the weekly chart. You can see that we're trading below the moving averages here. We've been finding some decent support down here at this 76% Fibonacci retracement level, which is what we're holding. So again, going back to the July chart, we're watching and waiting for a break above the 320 area with an anticipated move up to the 330 to 335 area. Those that don't want to trade futures or futures options can still participate in a potential bullish move to the upside in the grain complex via the ETF DBA. And if we type in ticker symbol DBA on a daily chart, notice that we are already having a bullish breakout today above an intermediate term downtrend line. Also confirmation with the 1, 2, 3 pattern as well, projecting a target on DBA of around 1735. Notice that coincides very nicely with the longer term 200-day moving average. The DBA is trading at $16.95. That's affordable for most looking for a move up to the 1730 to 1750 level. If you're trading soybean meal, each tick is worth $10. Each point is worth $100 per contract. So we're looking to go long the outright futures contract or purchasing calls or call option spreads. So good luck, good trading, and we'll see you on the next update. Traders, like what you see, want more trade ideas each week? Take a $7 30-day complete member access trial by clicking the link below. You'll have immediate access to analysis and seasonal trade ideas on over 35 commodity and currency futures markets, as well as coverage on all of the major stocks, exchanges, and ETFs in the U.S. marketplace. If you like us, follow us on Twitter and Facebook, like us on YouTube, and we hope to see you on the inside.